Hey there, my name is sjofors. Difficult name, I know. Not so difficult for my native Sweden, where it makes perfect sense, but here in the States it's a little odd. I'm often called the Price Whisperer, and I'm easier to find maybe on with that name if you want to Google search me and stuff like that. Well, in this episode, we're going to talk about why pricing strategy actually matters, and how a good pricing strategy really can change a company fundamentally. And let me start by illustrating that by a couple of examples, a couple of stories, if you like. And these are companies that I've worked with, so I know them intimately. And the first one is a company. They have several brands in the home theater and sort of audio sound industry, if you like. And the CEO of the company told me that understanding the right pricing strategy and focus, making pricing the centerpiece in their whole go-to-market strategy took that organization, that company, from just over 100 million in revenue to way over $1 billion in revenue. Now, not overnight. It took about 5 years, but it's still pretty good growth, isn't it? By making pricing the centerpiece in their business strategy, right? And making sure that they could take price wherever they could, right? Another example, a company we worked with just recently. They they have a consumer goods product, and we found that they were way underpriced, so that with our help, they could grow from revenues of about 200 million to revenues of or annual rate of revenue, I should say, of about 250 million. So 50 million in added revenue and no change in cost, right? No change in their business process, just by fixing pricing, right? How long did it take us? 3 weeks. Isn't that pretty awesome? And one more example is this company, a membership organization, pretty small, about revenues of about 15 million, and we helped them to an annual growth of annualized revenues of about 35 million. Also, no change in cost, so more than a doubling of the revenue. And of course, it made the organization hugely profitable, right? Just by making sure that they had the right pricing strategy. And the very last example here, another organization is a SaaS business in the oil and gas industry. When we started to work with them, they were about a $10 million company. They are now more than 120 million in about 5 years. So also by putting pricing as a centerpiece in their business strategy, and making sure that they didn't leave money on the table, right? So, and I think that's a key word here, not leaving money on the table. And what does that mean? Well, we know what it means, but how do you get there, right? And not to make sure that you do not leave money on the table. Means that you have to understand what your customers are willing to pay for the product or service that you sell, right? And if you understand that willingness to pay, you can price yourself accordingly. You can make sure that you're not underpriced and leave money on the table. You're not overpriced and thereby have a possibly a much lower sales volume than you otherwise would have had. And if you do your pricing strategy correct, You go out and you measure what your customers are actually willing to pay, but then also correlate that with different customer profiles, different personas, if you want to look at it that way, different customer segments, so that you can focus your sales and marketing towards the customer segment that is the most desirable one, which may be the customer segments that will lead you to the highest sales volume. It may be another customer segment that have other reasons for why they want to buy your product or service that leads to the highest revenue and the highest profitability, depending on your business goals, right? So you need to understand how that willingness to pay is affected by different customer profiles. And you need to understand what these customer profiles want in terms of product features, functions, and benefits, service features, functions, and benefits. So you can have an optimal product to market fit for the amount of money that they're willing to pay. And you need to understand these psychological price points called price walls. These are disruptive points where small price changes generate very significant changes in sales volume and revenue. You need to make sure that you're priced just on the right side of these. We just yesterday delivered a project to a furniture manufacturer, and they had this table that we looked at. They had it priced $6 above a price wall, right? So just a little tiny bit too high. Just by lowering the price with $6, their sales volume will double. Isn't that amazing, right? That's the beauty of understanding price walls, understanding what people are willing to pay for a product or a service. But there's more to making sure that you don't leave money on the table and that you have a pricing strategy that is optimal. You also need to know how to market and how to sell, and how your different marketing channels and marketing messages and so forth affect what your target audience is willing to pay for your product or service. You want to make sure that your sales methodology leads to the highest willingness to pay, and obviously you want to have a pricing strategy that is segmented in some way to minimize friction, right? And the presenting of price needs to be done correctly, right? I remember this was maybe a few months ago. I looked into one of these shared online drives, not Dropbox, essentially one of their competitors. And I looked at the website, and what do I expect? Well, I expected, like everybody else in that industry, to say it's going to cost you $5 a month, or it's going to cost you $10 a month, or $15 a month, or something like that, you know. What did I see? He said $385. And I almost fell off my chair here, because it was so different. And then in tiny text, I could see that was lifetime. You paid once and then you never pay again. But I can show you that most people didn't read the fine print that I did in this case, and they're just going to bounce out and be gone, right? I have another example, a company also selling a service, and where their competitors are all having a pricing strategy that is really very simple. It is how many users do you have, how many admins do you have, and they scale on that, right? This company, and again, it's fairly low cost, you know, $10 per admin, maybe $25 per admin, something like that per month. And what this company had, it says it's going to be $17,000, but for 5 admins, or whether it was maybe 10 admins, and you know, but the way they presented prices were so different, and it appeared to be so high. I actually spoke to the company, and the sales rep he was talking to me for at least 10 minutes, maybe 15 minutes, trying to convince me that their pricing, the way it was presented, was really, really cheap, really affordable. I didn't buy it. It was just completely racist. I mean, create so unnecessary sales friction that it's not funny. Well, it wouldn't be funny to be in one of those companies that I just mentioned anyway. So in short, you want to make sure you have pricing as the centerpiece of your business strategy. You want to make sure that you can measure willingness to pay in an accurate way. You want to know where the price walls exist, and you want to target right customers with a right product or service, using the most effective marketing channels and messages and sales methodologies. And you want to make sure you have a pricing strategy, and you present your prices in such a way that it minimizes sales friction and maximize also the value that your customers are perceiving they get from you by price alone. So that's my little advice for today. I hope you found this episode interesting and maybe even entertaining. And you now know a little bit of some mistakes that I encourage you not to do. Please, right? But I want to thank you for your time, and hope to see you next time.